Well, welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update, and Bitcoin is up 8.3% today. You've got coins like Atom, which have just absolutely finessed the game. We were looking to long Atom yesterday. We got shaken out, but we were right on the idea. But ideas don't make you money, executing them does. But essentially, we're going to be diving into a number of things in this video. We did actually call for something like this to take place. This was around about 3 days ago now, after we had that kind of spill to the downside. And the reason that we were looking at some sort of a move like this, and it could continue to go, we have targets. For me, we're looking at a head and shoulders. We're going to break all that down to you in this video. This isn't your mumbo jumbo BS TA that's on YouTube that 99% of people do. Anybody can learn to do TA, but it's like anything in life. If there's no sort of critical thinking behind it and there's no reasoning, often it falls short. And this is how we essentially haven't been caught out on this move to the upside and actually caught the move to the downside and then the return move. But we're going to talk about all that and do some real TA, looking at broader patterns, looking at a head and shoulders pattern that I think is going to play out and take Bitcoin to 14K. And if I'm saying Bitcoin is going to go to 14K, well, the environment has to support it. First of all, we've spoken about the dollar taking a break. Intraday, we were looking to long the dollar yesterday, and we did indeed off of this double bottom. We didn't long it, but it's played out. And we said, look, back here, the dollar's had an amazing run. It's now cooling off. This is very, very predictable, and we know the correlation between Bitcoin and the dollar. Let's just pull the charts up. You can see the correlation here, guys, right? Okay, yeah, a little bit skewed here, but not really. Dollar shoots up, Bitcoin goes down. Dollar's taking a rest, Bitcoin going up. So what you got to understand as a cryptocurrency investor and market speculator and player is that there's larger forces at work. And we're going to talk about that. We're going to be getting into a number of things. We're going to be talking about the Fed liquidity. You guys know that I think markets are just driven off money, liquidity. And we're in a time period where liquidity continues to get sucked up by the Federal Reserve vacuum in the form of inflation. It's why we've seen interest rate hikes. It's why we've seen the dollar do so well. Still think there's a lot more pain to come for markets. And the target that we actually have looks to take Bitcoin down to around about 14K. Forgive me for that, guys. So essentially, we've got potentially a little bit more upside to come. We're already running into these levels here, and this is just caused by a complete short squeeze. But really where I want to start is with this clip of Jerome Powell, because this is why I think ultimately markets are going to continue to roll over. There's going to be pushback at every single point. This is how it goes, guys. Markets don't just go straight down. It's why if you're trading these markets, you need to know what you are doing. Because if you don't have your stops placed in the right place, you're going to get your accounts liquidated if you're using any kind of leverage. And Atom is a perfect example of that. This would have liquidated an unfathomable amount of shorts. People would have been looking at this as the sort of local high, and it went all the way up to 17. You've just got liquidated. So you need to know what the hell you're doing, and that's why this has seen such an explosive move up. You've got to remember, these markets are loaded. It's like a catapult effect with all the leverage, or a slingshot effect with all the leverage that's thrown around right now. And you need to know what you're doing in order to play. And you need to understand the macro picture and so on and so forth. Stuff we bang on about every single day, and people go, oh, it's like Groundhog Day. But it's important, and if you don't get it, you're going to get your ass handed to you. Let's start with this clip from CNBC talking to Jerome Powell. And again, straight off the bat, they're talking about Volcker. And Jerome Powell is going, I knew we were in a bit of trouble around about 44K when Jerome Powell started saying that he's reading Paul Volcker's autobiography. Because you understand what Paul Volcker did. He didn't mess around. He was more than willing to plummet the entire country and the surrounding allies into a recession because just to fight inflation. Jerome is on that same warpath. That's going to take more liquidity out of markets. We can pull up the M1 supply. We can pull up a number of things to kind of show you guys where we're coming from. And then we're going to draw the technical pattern that we have for Bitcoin. That's going to take us to around about 14K or certainly sub 15K. Let's play the clip, guys, and let's talk about it.
In 1979, his first testimony, a month after he was confirmed, Paul Volcker made clear he understood the damage that was being caused by inflation and the need to bring it down, even if it required great costs in other economic ways. One of the lessons of that episode was the greater the extent to which inflation slips the leash, the higher the cost and greater economic damage necessary to bring it under control. I worry whether we have the resolve to bring inflation under control today, to face the potential economic costs. I took some comfort from your recent remarks in Jackson Hole, which seemed an attempt to signal that kind of resolve. But I do remain concerned that, the intense political pressure that might be brought to bear to avoid collateral economic damage before the inflation fight is won. And I just wondered if there's any way you can help me sleep a little bit better on that score.
So that's the question. Here's the answer.
Sure. So I think it's worth going back and remembering, and I pointed this out in my remarks 2 weeks ago at Jackson Hole, 10 days ago, that what Paul Volcker did and the Fed did to finally get inflation under control followed several failed attempts to get inflation under control. And what had happened over the course of that long period of the Great Inflation is that the public had really come to think of higher inflation as the norm and to expect it to continue. And that's what made it so hard to get inflation down in that case. So it is very much our view and my view that we need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done to avoid that. We think we can avoid the kind of very high social costs that Paul Volcker and the Fed had to bring into play in order to get inflation back down and set us up then for a long period of price stability. That speech, the point really there was to deliver a speech that was narrowly focused on inflation, more direct and a lot shorter than a typical Jackson Hole speech. And I thought that what was appropriate was a very, kind of concise and focused message. To your question, the message really was that the Fed has and accepts responsibility for price stability, by which we mean 2% inflation over time.
We're still at 8% inflation. He's talking about over time, so he's looking into the future. There's pricing for inflation around about 3% next year. But and this is how they one way they come up with a neutral rate is where interest rates, they've got to be 50 basis points above. That's your kind of neutral. And they're going into restrictive. They know they're doing that, but they're going to continue. Everything he said so far is very negative for any kind of a market that needs money. It's all about killing demand to bring it back in line with supply. How do you kill demand? Well, you essentially take money out of people's pockets. Inflation's already doing that, and then you've got liquidity being sort of scooped up in opposition with March 2021 liquidity was just thrown at everyone and essentially taken off the table so that it can't go into markets, can't go into many of these things that have an inflationary issues.
That, again, to your question, the longer inflation remains well above target, the greater the risk that the public does begin to see higher inflation as the norm. And that has the capacity to really raise the costs of getting inflation down. So finally, history cautions strongly against prematurely loosening policy.
All your people calling for a pivot, ignore them. Yeah, and even though we had a lower CPI print in China, actually, take that data for what it is. But essentially, even if we get a lower CPI print on this one, now it may be round about the same price. I think, that going into winter, CPI is likely to spike up actually again. It may decline this month, maybe even next. Then going into the sort of winter months, it's going to really pop up. But he's basically saying we are not going to back off it. And yet, everybody on Twitter, everybody on YouTube, get ready for the pivot, get ready for the pivot. And the pivot's going to be important because that's going to be one bottoming signal that you want to look for. But it's not coming yet. And to Jerome's credit and the Federal Reserve's credit, and I don't like to credit them for much, he's telling you what he's going to do.
I can assure you that my colleagues and I are strongly committed to this project, and we will keep at it until the job is done. I can also assure you that we never take into consideration external political considerations. We are accountable to the public through Congress. That's a very fundamental, important aspect of our work. But we do not. We focus solely on the goals that Congress has given us, and that's what we're going to do here.
All you need to know, ladies and gentlemen, there's going to be more liquidity taken off the table. This is, again, from one of my favorite Twitter accounts, Cross Border Capital. Latest weekly Fed liquidity in S&P. Still on track, but not much QT yet. So there's talks, essentially, and you can see, just look how correlated these are. You've got the S&P in the orange, and you've got the US money supply. US money spikes up, markets spike up. You know, it's all about money, liquidity. And this is, you can see just how tethered these are. You can show it in the dollar rate. You can show it in the euro dollar futures. You can show it in the 30-day interest rate hikes. You know, it's all a liquidity story, and you've got to understand that. And this is how this pump has been so predictable, because the dollar was running out of steam. Key level here, look, dollar's likely going to come down somewhere here. We did say 108. That was our target, actually, from well below 100 that we were looking at getting to. Look for 104. That's going to allow the risk on asset to do quite well over the coming. You know, I think this is just going to be a short and sweet pullback towards the end of the month. You know, you got to remember DXY is 40% plus pegged against the euro. Euro just did a big interest rate hike, 75 bips. Long time since they've done that. We are in definitely a recession as a result of them doing that. So this is naturally going to come up against a bit of resistance. But if they do a 75 basis point, which I actually didn't think the euro was going to do a 75, or the ECB was going to do a 75 basis point rate hike, it's going to catch a bid. So you may get a drop, assets rise, we get filled, and we form this broader head and shoulders pattern that we're looking at. So this is what we're looking at, essentially. And remember this. I'm not seeing anyone else talk about it. This is your left shoulder. This is your complex head. And then this is the right shoulder that we're forming. You'd invalidate this structure. Technically, you'd invalidate it if you went above 22,500. But I would start to get worried if you come in and you fill this in. Not just fill it in, hold it, and then see some move like that. You don't want to see a right shoulder. You do want to see a right shoulder and head and shoulders, but you don't want to see a strong right shoulder in opposition with a left shoulder, because that shows you that a weak right shoulder is kind of like the precursor that you're going to be right. We've already got a checklist on the fact that this took a lot less time to sell off to this neckline than it did to go up. So that kind of gives you an idea of where the pressure really is. But really, we're looking at this roll and this further move to the downside. And we did say this was totally on the cards. And the reason we actually called for this short squeeze, it's not black magic or anything like that. You know, we did actually say a while ago, again, please go and follow me on Twitter, guys. The dollar is running out of steam here. And you can see that was at 110. It's now at 108. Doesn't seem like a big move, but in the FX market, that's considerable. And we have actually been calling for this head and shoulders. You know, this level has to be respected. Everybody, and it's the one reason why I was so against looking for shorts down here, was because we're looking for shorts here, don't get me wrong, and we got them, but we were so against shorting down here because every Tom, Dick, and Harry, Hannah and Jane, you know, let's be a little bit inclusive here, was looking to short this, and were shorting it. CoinShares short Bitcoin product saw record inflows. I don't want no part of that trade. Everyone else is in it. Okay, let them have it. Because typically, when everyone FOMOs into something, it goes the other way. And that's how markets work, guys. They are there to take money off you. It is a very, very simple game. 90+% of traders do not make money. Don't listen to the nonsense on Twitter. And if you see anybody posting their results from a 50 to 125x leverage, immediately unfollow that account. They are gamblers. They are not traders. You know, maybe you can say, okay, if they're scalpers for sure, but you know, it just winds me up, the world that we live in, guys, because it's so fake. And if you only have a little bit of nous, a little bit of understanding in regards to markets, how they work, the crypto space, its correlation, you know, you'll see the wood through the trees. And we've still got people. By the way, this pump doesn't mean nothing. This is going lower. This shit's going down, but not yet. Yeah, you don't just go vertically down to 9K. Not that I think, I'm not calling 9K as the bottom, but you're always going to see. Already talking about the head and shoulders, this is a little bit of a concern. The strength in this candle. There's some great books on Japanese candlesticks out there that you guys should read, and the formations that they put in and what you're looking at. It's how we've been able to get shorts off, really looking at structure before pivots in the short-term market flow. And there's various ways you can do that. You can hide Kanashi candles or whatever. If anybody's interested in joining my Patreon, there's a link in the description. But that is really all we've got for you guys. You know, look for this head and shoulders pattern. Don't get faked in again to thinking. People got so faked into thinking this because of all YouTubers was the bottom, and oh my goodness, you know, we're up 100% on certain coins. And if you caught that, fair enough. We made 100+% just on this drop. You know, through shorting it, through using the futures contract market. You can make money. Good traders make money on both the ups and the downs. All I've got for you in this video, guys. If you enjoyed the content, like, as always, appreciate it. So as a comment, remember, Jerome Powell is not backing off until the job is done. That means there's going to be more painful markets. They also aren't going to like the fact that markets are doing what they're doing. This is still bear market for me. You know? And this sell-off tells you all you need to know. So does this one. So does this one. You know, when did you have these sell-offs prior, other than March 2020? Few and far between. This is all you're doing, guys. You're having a little bit of resistance. And then you're going to see that further downside, in my humble opinion. All I've got for you, if you enjoyed the content, like, as always, appreciate it, as a comment. I'll catch you all in the next YouTube video. Thanks a lot for watching, ladies and gents.